Here we go. Here we go, guys. It is February 9th, 2026. We've got the stock market ahead of us, and we're going to look at it together. Guys, it's your cousin Dustin. If you watch this, like and subscribe if you like it. I mean, give a brother a like. Give a brother a subscribe. So, we're going to go through the market as we do every Monday, Wednesday, and Friday. I think today I'm going to cover a lot of individual stocks. That's going to be one of my goals for the day, unless I get kind of sidetracked, which I sometimes do. Peep the heat map, beat map, heat map. We got a mixed bag on the heat map. We got a mixed bag over here, guys. Nvidia's up 2.88%. We're going to look at Nvidia's chart today. AVGO up 3.92%. AMD up 3.74%. It's 3:09 in the afternoon right now. A lot of stuff could pop off by the end of the day. It's only Monday. Berkshire Hathaway's down 1.73%. I feel like a lot of these, customer service. No. This stuff. Retail trade, I think, is kind of down today. I wonder what's causing that. Consumer non-durables. Okay. I got a few stocks wrote down over here. Let's look at Ford. Ford has earnings coming up this week. And I want to do a look at their charts. Why is this in euros? What? There we go. Okay. Alright. I don't think anybody's watching, but let's pull it up on my thing here anyways. Okay. Alright, here we go. So we're going to run through a few kind of like consumer-esque stocks. And then we'll hit the regular charts and stuff like that. Just to kind of shout it out, we got Dow Jones up 0.04%, passing that $50,000 or 50,000 range. That's going to be a big mental crossroads, I guess you could say. S&P 500 getting closer and closer to 7,000. Bitcoin. Did Bitcoin bottom at 60,000, guys? I'm going to go ahead and tell you I don't think so. But it would be cool if it did. That would be pretty cool. It's at 70,000 right now. Up 0.2% on the day. The Qs are at 615. Up 0.94%. 4% on the day. Good stuff. All right. Back to the charts. Like I said, I want to cover a lot of different stocks today. So we got Ford Motor Company here on February 9th, 2026. Right now they're up. No, they're not. I'm looking at stupid stuff. Right now we got Ford Motor Company. It's at 1368. They're down 0.91% today. On a 5-day chart, they're down 0.33%. On a 1 month, they're down 3.7%. On a 6-month chart, they're up 22.76%. Year to date, Ford is up 4.23%. Ooh. On a 1-year chart, they're up 48%. Okay, over the past 5 years, they're up 19.43%. That's the maximum they'll show you here on Google Finance. They go back to 1986. They got a market cap of 54.41 billion. Dividend of 4.39%. Quarterly dividend 15 cents. A PE ratio of 11.73. 52-week high of $14.50 and a 52-week low of $8.44. Their EPS is $1.17. EPS is $1.17 a share. Very interesting Ford here. Let's just read the Google Finance headline here. Ford Motor Company declined over 4% in the last month as investors anticipated a weak earnings report due to significant EV write-downs. Analysts project a cautious near-term outlook for the next quarter, balancing a strategic shift toward hybrids with ongoing EV losses and a weakening auto market. Wow. If anybody watches this, guys, what do you think about the auto industry? Do you think it's really going to become like all electric vehicles? Do you think China's going to start selling Chinese cars to America and stuff like that? A lot of wacky stuff could go on in the next few years. Who really knows? A whole lot of crazy stuff could happen. From 18 minutes ago, here are the Ford Mustang discount lease finance deals in February 2026. 55 minutes ago. Ford sales are expected to fall amid shift away from EVs earnings preview. Benzinga. A glimpse of Ford Motors' earnings potential. Let's check it out. Let's check it out. This is a 4-minute read. By Benzinga Insight staff writer. Ford is gearing up to announce its quarterly earnings on Tuesday, 2026, the 10th. Here's a quick overview of what investors should know before the release. Analysts are estimating that Ford Motor will report an earnings per share of 18 cents. Analysts estimate an EPS of 18 cents. The market awaits Ford Motors' announcement with hopes high for news of surpassing estimates and providing upbeat guidance for the next quarter. It's important for new investors to understand that guidance can be a significant driver of stock prices. Earnings history snapshot. During the last quarter, the company reported an EPS beat by 8 cents, leading to a 12.16% increase in the share price of the subsequent day. Here's a look at Ford Motors' last performance and the resulting price range. Got a little chart here. So they've beat. Check them out. Pretty cool. Pretty sweet. Market performance of Ford Motor stock. Shares of Ford Motor were trading at 13.8 as of February, $13 and I guess 80 cents as of February 6th. Over the last 52-week period, shares are up 48.21%. Given that these returns are generally positive, long-term shareholders are likely bullish going into the earnings release. Analyst views on Ford Motor. Understanding market sentiments and expectations within the industry is crucial for investors. This analysis delves into the latest insights of Ford Motor. Analysts have provided Ford Motor with 9 ratings, resulting in a consensus rating of neutral. The average one-year price target stands at $14.09, suggesting a potential 2.1% upside. Understanding analyst rating among peers. The analysis below examines the analyst ratings and average one-year price targets of and Ferrari, 3 significant industry players. Okay. Three significant industry players providing valuable insights into their relative performance, expectations, and market positioning. Analysts currently favor a buy trajectory for Ferrari with an average one-year price target of $488.67, suggesting a potential 3,441% upside on Ferrari. Snapshot peer analysis. The peer analysis summary outlines pivotal metrics for and Ferrari, demonstrating their respective standings within the industry and offering valuable insights into their market positions and comparative performance. Am I reading this like in some kind of... If anybody ever watches this and lets me know, please. I mean, I can read, bro. Look at their little chart here. Compared to Ferrari. So they're saying Ferrari's a buy. I don't know. Never really looked into Ferrari. That's kind of cool, though. Maybe we'll do that next. Why not? That's definitely what we'll do next, actually. Why the heck not? Key takeaway. Ford Motor is at the bottom for revenue growth among its peers. It is also at the bottom for gross profit. However, it is in the middle for return on equity. Delving into Ford Motor's background. Ford Motor Company manufactures automobiles under its Ford and Lincoln brands. In March 2022, the company announced that it will run its combustion engine business, Ford Blue, and its BEV business, Ford Model E, as separate businesses and still all under Ford Motor. The company has nearly 13% market share in the United States and about 10% share in the UK and under 2% share in China, including unconsolidated affiliates. Sales in the U.S. made up about 68% of 2024 total company revenue. Ford has about 171,000 employees, including about 56,500 UAW employees, and is based in Dearborn, Michigan. Here's some financial insights for Ford Motor Company, according to this here article. Financial insights. Ford Motor. Market capitalization, indicating a reduced size compared to industry averages. The company's market capitalization possesses unique challenges. Revenue growth. Ford Motor's remarkable performance in 3 months is evident as of September 30th, 2025. The company achieved an impressive revenue growth rate of 9.39%. This signifies a substantial increase in the company's top-line earnings. As compared to competitors, the company encountered difficulties with a growth rate lower than the average among peers in the consumer discretionary sector. Net margin. Ford Motor's net margin is impressive, surpassing industry averages with a net margin of 4.84%. The company demonstrates strong profitability and effective cost management. Return on equity. Ford Motor's ROE excels beyond industry benchmarks, reaching 5.29%. This signifies robust financial management and efficient use of shareholder equity and capital, or equity capital. Return on assets. Ford Motors' ROA surpasses industry standards. highlighting the company's exceptional financial performance with an impressive 80.82% ROA. The company effectively utilizes its assets for optimal returns. Debt management. Ford Motors' debt to equity ratio is notably higher than the industry average, with a ratio of 3.47. The company relies more heavily on borrowed funds, indicating a higher level of financial risk. Alright. So I go back a little further on TradeView here. Alright, we're going to ask Gemini, give me a brief history of Ford as a stock and a company. See what it comes up with. Ford Motor Company isn't just a car maker, it's a pillar of American industrial history. Its journey from a backyard workshop to a global powerhouse, and its life on the New York Stock Exchange is a saga of massive innovation and equally massive volatility. The company, from Model T to EV, Ford's history is defined by three major pivots. The early years, 1903 to the 1920s. Henry Ford didn't invent the car, but he invented the assembly line. By 1908, the Model T made car ownership possible for the middle class. By 1914, he introduced the $5 a day wage, essentially creating his own consumer base. The post-war era, 1940s to 1970s. After pivoting to B-24 bombers during World War II, Ford introduced the iconic F-Series truck, 1948, and the Mustang, 1964. The F-150 eventually became the best-selling vehicle in America, a title it has held for over 40 years. That's pretty cool. The modern pivot, 2000s to the present. Under Alan Mulally, Ford was the only Big Three Detroit automaker to avoid government bailout during the 2008 financial crisis. Today, the company is splitting its focus between Ford Blue, gas hybrid, and Model E electric vehicles like the Mustang Mach-E and the F-150 Lightning. Alright. The stock. A century of dividends and cyclicality. Ford went public in 1956 in what was then the largest IPO in American history. As a stock, ticker F, it is known for being a cyclical value play. Some key milestones for investors. The 1956 IPO, 10.2 million shares sold at $64.50 each. It was a massive cultural event. The 1990s boom, Ford hit its all-time high adjusted for splits in 1999, fueled by the explosion of the SUV market with its Explorer. The 2008 resilience. While GM and Chrysler went bankrupt, Ford stock dipped below $2 but survived, eventually rebounding in the mid-teens by 2011. That's where it's at right now. The EV era, 2021. Investor excitement over the F-150 Lightning sent the stock to a 20-year high, near $25 before settling back down. Now, this is all according to Gemini, so we're, you gotta take it with a little bit of hope it's as accurate as it can be. But we do our best. We move on. Why investors watch Ford. The dividend. Historically, Ford is a favorite for income investors, though the dividend has been suspended and reinstated several times during economic downturns. The Ford family. Through Class B shares, the Ford family maintains about 40% of the voting power, despite owning a small fraction of the total equity. Cyclicality. Because cars are big-ticket items, the stock is highly sensitive to interest rates and consumer confidence. The bottom line, according to Gemini. Ford is no longer the high-growth tech stock it was in 1990. Today, it's a legacy giant trying to prove it can be as efficient with software and batteries as it was with steel and rubber for stockholders. It's often a play on the health of the American middle class and the success of the energy transition. We'll open a new chat and we'll do that with Ferrari here in a second. So we'll take a look at the heat map real quick, just make sure nothing too crazy is going down. It's 3:35 in the afternoon, guys. I don't think anything wild has happened. No alarms are going off. But yeah. We got Microsoft up 2.84%. Meta's up 2.72%. Tesla's up 2.06% today. So far, so good, guys. The finance sector is a mixed bag. We got a bunch of green. We got a couple reds. We got MasterCard down 2.31%. Visa's down 1.9%. Berkshire Hathaway is down 2.1%. Is that Burger King? No. I was about to say. Okay. Caterpillar's up 2.03%. Alright. Let's try this. Ferrari. Well, what the heck? What's their ticker symbol? Oh, it's FE. Yeah, I think. There it is. Is it only on the Europeans? There it is. This must be the one they're talking about, guys. If not, then somebody get me. Somebody get me. Guys, this is never financial advice. I'm just learning as I go. I'm trying to figure this stuff out as I go. Okay. Let's look at Ferrari here. As of February 9th, 2026 at 3:39 in the afternoon, Ferrari is at $335.36. Over the past 5 days, it's down 2.06%. Over the past month, it's down 10.85%. Over the past 6 months, it's down 24.01%. Year to date, it's down 9.25%. Over the past year, it's down 27.22%. Over the past 5 years, Ferrari is up 63.31%. That's our best all-time chart here on Google Finance. Going back to October 23rd, 2015. Okay. Let's check out some of the stats here. Well, it's got a 52-week high of $519.10, 52-week low of $328. It doesn't seem to have a Is the earnings call like right? Oh, it's it's at 9 a.m. tomorrow. Okay. Look at that. Earnings at 9 a.m. tomorrow. I guess they're estimated at negative. They're not profitable. They're negative $2.07 or €2.07. I guess is what we're looking at here. We're getting real wacky, guys. We're talking about European stuff here. We're talking about Ferrari. But hey, we're comparing it to Ford. I don't know. I'm learning as I figure it out. Whatever. This is interesting stuff to me. Revenue estimate negative 1.78 billion euros. Wow. At least Ford's profitable. Pays a dividend too, Ford does. What you know about that? I guess Ferrari does not, as far as I'm seeing here. Okay. At a glance, upcoming earnings. Expectations. Analysts project Q4 2025 EPS of $2.46 and revenue of $2.04. No, $2.0445 billion, with full year EPS forecasts around $9.22. I mean, we get the deal with Ferrari, guys. The core business strength is driven by a favorable product mix and high demand for personalizations, which contribute significantly to revenues and support strong margins. Yeah, we get that. That makes sense. Upwardly revised guidance for 2025. Ferrari revised its full year 2025 guidance upwards after Q3 2025 results, expressing confidence in achieving profitability targets ahead of schedule, with an order book extending into 2027. Oh shit, what did I do? Okay. Alright. Let's see if we can find an article about them. No, we don't get an article for... Oh, here we go. Just highlight everything. Alright. It's not gonna let me do it. That's okay. We just read the earnings guidance anyways, and I saw on there it's the same as what I just read. So, that's cool. That's good. So what we'll do is we'll have a look at it over here on TradeView. Alright. Just kind of go through the charts here. 5-day. 1 month. Down. Okay. Let's do this. Alright, so here we go. We're going to compare them. We're going to put Ferraris and Fords. Both of them up there on the list. So this is the all-time charts. Looks kind of weird because it doesn't really go back as far. We got Ferrari in purple and Ford in like yellow gold. Over the past 5 years, check them out. Over the past 6 months. Alright. Over the past 1 month. And over the past 5 days. Alright. Very interesting stuff. We've got Ferrari with its high-end, highly customizable vehicles and stuff. And then we got Ford with the EV and hybrid situation going on. Very interesting. I think that'll be enough of that for now. Let's look at something else. Let's go. It's 3:50 in the afternoon. Let's just run through the charts real quick. Killing me. Heat map, make them slap. Let's go. Cryptocurrencies, let's check them out. See what they're up to today. Bitcoin's moving. It's $70,730.55. Just going down as we speak. Ethereum is at $2,127.27. 29 cents. We're still sitting at a 9 out of the extreme fear gauge here on CoinMarketCap. My goodness. XRP up 0.09% today. Solana. Let's look at some of the wacky ones. Let's get down here. Hyperliquid, I've heard of that one. $31.95. Hyperliquid. Alright, let's keep it moving. Let's look at Dogecoin. Down 0.03% today. There's some wacky stuff, 0.09 or 0.9637 cents. There we go. That's not the goal for today, is to get sidetracked into these weird coins. That's not what we're doing. We're going to look at another couple stocks here in just a moment. We'll run through the charts. Yeah. So the Dow Jones is up over 50,000, up 0.04%. Check it out. Over the past 5 days, it's up 1.22%. Over the past month, it's up 1.28%. Over the past 6 months, it's up 14.01%. Keep it simple, guys. Over the past year to date, it's up 4.31%. Over the past year, it's up 12.74%. Over the past 5 years, the Dow Jones Industrial Average is up 59.37%. And all time, going back to February 7th, 1986, it's up 3,007.43%, sitting right now at 50,135.92 at 3:55 on February 9th, 2026. Pretty cool. The S&P 500. Let's actually do this. Here we go. Dow Jones hits 50,000 as tech stocks rebound. Investors weigh sector rotations, global rallies, and upcoming U.S. economic data as volatility persists in early February 2026. February is historically a down month, guys. Just, don't get too upset about it. Back to the article here, or beginning the article here. That was my own little thing. Here goes the article. By the Grand Pinnacle Tribune. Markets worldwide have been on a roller coaster ride in early February 2026 as investors digest a whirlwind of economic data, shifting sector dynamics, and geopolitical currents in the United States. Stock benchmarks have been oscillating between optimism and caution, with the Dow Jones Industrial Average grabbing headlines by breaking above the 50,000 mark for the first time ever last week, while the S&P 500 and NASDAQ hovered near their own records but lagged slightly behind the blue chip index. According to Market Pulse, the surge in the Dow Jones was propelled by a defensive rotation away from high-flying technology and artificial intelligence stocks into more traditional sectors such as energy, consumer defensives, and agriculture. This shift followed months of tech outperformance and signaled what many analysts see as a turning point in market positioning. The era when every sector rose together appears to be over, replaced by a more selective hunt for value and local mispricings. Individual stocks, I guess. Yet technology stocks were far from down and out. On February 8, 2026, another rally in tech companies unfolded. On February 8, 2026, another rally in tech companies unfolded after an artificial intelligence-driven rout had initially rattled the sector. Oracle Core soared 10% in a single session, and a gauge of chip makers climbed 1.9%, while an ETF focused on software names extended its two-day advance to 7%, as reported by Bloomberg. The S&P 500, riding the coattails of this tech resurgence, added another leg to a surge that had already tacked $1 trillion onto its value at the end of the previous week, bringing the index closer to its all-time highs. All right. Meanwhile, gold continued its dramatic ascent, topping $5,000 an ounce, a remarkable feat after roughly doubling in price over the past year. Silver too posted a strong gain, up 5.5% on February 9th, 2026, according to the Associated Press. The dollar, on the other hand, softened, reflecting shifting investor sentiment and perhaps some caution ahead of pivotal U.S. economic releases. Hit the monster, bro. As the week began, global markets took their cues from Asia, where Japan's Nikkei 225 index surged 3.9% to a record high, buoyed by a landslide victory for the Prime Minister's party in a parliamentary election. This political win was widely seen as a green light for further economic reforms. South Korea's Kospi, I'm guessing at how you say this stuff, guys. Kospi jumped 4.1%. Hong Kong stocks rose 1.8%, and Shanghai advanced 1.4%. European markets, by contrast, posted mixed results, reflecting a more cautious outlook. Yeah, that's what I had in my notes here. It was that little, they had like an overnight election or something like that. We'll check into that here in a minute. Not going to spend too much time on that. But I'm not spending any time on it. Not too much time, anyways. But by the time trading reached Wall Street on February 9th, 2026, the global rally had lost steam. The S&P 500 was virtually unchanged in morning trading. The Dow Jones slipped 154 points, or 0.3%, while the NASDAQ composite eked out a modest gain of 0.1%. The majority of U.S. stocks declined, but AI-linked chip makers like Nvidia and Broadcom bucked the trend, rising 3.3% and 1.5% respectively, helping to prop up the broader market. Other notable corporate moves included Kroger's 8.2% jump after naming a former Walmart executive as its new CEO, and a dramatic 26.9% plunge for Hims and Hers after Novo Nordisk filed a lawsuit alleging the company was unlawfully selling versions of its weight loss treatments. Novo Nordisk's own U.S. traded share rose 5.8%. Workday dropped 7.5%, following the resignation of CEO Carl Eschenbach, with co-founder Anil Bousri stepping back in as chief executive in the energy sector. Transocean slipped 0.8% after announcing a $5.8 billion all-stock deal to acquire Valaris, whose shares leaped 22.5% in response. I rather like this article, guys, I ain't gonna lie. The Grand Pinnacle Tribune, we'll remember that. In the bond market, Treasury yields were steady with the 10-year yield holding at 4.22%. Investors were bracing for several key U.S. economic reports scheduled for release throughout the week. Retail sales on Tuesday, the closely watched non-farm payrolls report on Wednesday, and the Consumer Price Index update on Friday. Any surprises in these data points could sway expectations for the Federal Reserve's next moves on interest rates, which have been on hold amid uncertainty about inflation and labor market strength. Yeah. It's time to let it rip. I think it's time to let it rip. No, I really have no idea. As Market Pulse noted, traders were keeping a close eye on Fed Governor Waller's speech scheduled for February 9th, 2026 at 1:30 p.m. So that was today. Hoping for any hints of a shift in the central bank's tone, especially now that Waller is no longer in the running for Fed chair. The possibility of a faster pace of rate cuts remains on the table if the job market shows signs of weakening. But persistently high inflation could force the Fed to keep rates elevated for longer, a delicate balancing act that continues to unsettle markets. Guys, if you're looking and you're liking, like and subscribe. It would help me out. My goal is to reach 1,000 subscribers by the end of this year. Think we can do it? I think we can do it. Technical analysis, we're watching key resistance and support levels across the major indices. For the Dow Jones, holding above 50,000 was seen as a bullish sign, with further resistance at 50,271 and support zones stretching down to the psychological $45,000 level, or 45,000 points. The Nasdaq, after breaking out of its downtrend, faced pivotal resistance at 25,700 to 25,850, with support around the 25,000 mark. The S&P 500, meanwhile, appeared poised to retest its all-time record of 7,020, though a breakout seemed unlikely before the week's data releases. Any rejection of these highs would reinforce the index's range-bound character. Here we go. Of course. Okay. Geopolitical risk, particularly developments in Iran, remained a lurking threat to market stability, while traders' attention had shifted away from these tail risks for the moment. Analysts cautioned that any sudden escalation could inject fresh volatility into global markets. Cryptocurrency markets were also in flux. Bitcoin, which had climbed above 71,000 over the weekend, dipped back towards 69,000 by Monday. The digital currency had experienced wild swings, having dropped close to $60,000 just a week earlier, well below its record set in October. All told, the first half of February 2026 has underscored the complexity and interconnectedness of today's markets. Investors are navigating a landscape shaped by rapid technological change, evolving sector rotations, central bank policy uncertainties, and geopolitical crosscurrents. With the S&P 500 and Dow Jones perched near historic highs and gold glittering above $5,000, the stakes for the week's upcoming economic data could hardly be higher. As the market braces for the next round of numbers, the only certainty is that volatility and opportunity will continue to go hand in hand. There you go. Okay. Pretty cool. Pretty cool. I wonder if I just send them my email, will they stop bothering me? I have a feeling they won't. I have a feeling they won't. Let's check out gold and silver. The COMEX. Silver's at $83.64. Over the past 5 days, it's down 0.78%. Over the past 1 month, it's up 5.42%. Over the past 6 months, it's up 121.33%. What do you guys think? Y'all think it's going to keep going up, or you think it's going to go back down? Year to date, it's down 18.47%. No, it's up. I'm crazy. You're crazy, bro. Year to date, it's up 18.47%. Over the past year, it's up 157.43%. Over the past 5 years, it's up 206.04%. As far as it goes back to January 27th, 2012, that's interesting. The COMEX. Let's have a look at gold. Gold is at $5,102.60. It's up 2.47% today. Over the past 5 days, it's up 2.67%. Over the past 1 month, it's up 13.37%. Over the past 6 months, it's up 49.87%. Year to date, it is up 17.54%. Over the past year, it's up 73.89%. Over the past 5 years, it's up 179.87%. There's the max chart on Google Finance. Let's consult my notes real quick. Okay. Let's take a look at SoFi stock. People seem to like this one. I don't know too much about it. Not doing anything special in after hours trading. It's just sitting here at $21.35. So right now, guys, SoFi is sitting at $21.35. Over the past 5 days, it is down 0.09%. Over the past 1 month, it's down 22.08%. Over the past 4.7 over the past 6 months, it's down 4.77%. Year to date, it's down 18.45%. Over the past year, it's up 41.11%. Over the past 5 years, it's down 10.67%. Okay, there's the all-time chart, as far back as we go. Alright. They got a 52-week high of $32.73, a 52-week low of $8.62. So right now they're kind of in the middle at $21.35. An EPS of 38 cents. EPS of 38 cents a share. That's SoFi. I don't know. It doesn't really catch my eye too much. It's not speaking to me. Let's check out another one. This is a stock I've traded in and out of. Honest. If I recall, they are down right now. Down in the dungeon. Oh yeah. $2 bad boy down in the dungeon. Look at that. Alright. So here we go. We've got Honest Company. Sitting at $2.21. We got Honest Company sitting at $2.21. Today they're down 3.49%. Over the past 5 days, they're down 9.05%. Over the past 1 month, they're down 14.34%. Over the past 6 months, they're down 44.75%. Year to date, down 14.34%. Over the past year, they're down 63.71%. Over the past 5 years, they're down 88.42%. Look at the max chart. Look at that. They got a PE ratio of $36.06. They got a PE ratio of 36.06. EPS of 0.06 a share. EPS of 6 cents a share. This is a profitable company. Right? I mean, what are we looking at? A 52-week high of $6.46. A 52-week low of $2.15. I mean, they got stuff coming out. You know what I mean? There was other stocks that don't even have anything written about them. Let's see. Let's read a little something about it. Why not, you know? They're sitting down in the dungeon at $2? I mean, my goodness. In the dungeon, bro. Alright. This came out earlier today by Mo Busiani. Jessica Alba update, Super Bowl cameo, new film plans and Honest Company shifts. Why not? Why not give it a read? Who cares? Jessica Alba stepped back into the center of pop culture spotlight over Super Bowl weekend with a surprise halftime cameo. While her professional slate continues to span both entertainment and consumer business, the past 2 months have brought fresh signals about where she's putting her time next. On-screen work behind the scenes producing and the evolving strategy of the household products company she co-founded. Pretty cool. Here's what's new as of Monday, February 9th, 2026. Surprise appearance at the Super Bowl halftime show. Alba made an on-field cameo during the Super Bowl halftime performance on Sunday night, February 8th, 2026. The moment was brief but highly visible. What? Highly visible, placing her among a group of celebrity appearances woven into the show's staging. The cameo also reinforced a pattern that's become familiar in recent years. Alba's public profile is increasingly defined by a mix of entertainment moments and business headlines rather than a single lane. Even without a new release landing this week, the halftime visibility effectively put her back into the national conversation overnight. Like it slowly goes down. Acting and producing collaborations taking shape. Away from the halftime stage, Alba's upcoming work includes at least 2 film collaborations that have been discussed publicly in recent months. One project would reunite her with filmmaker Robert. If this thing would sit still, I'd read it. You know what I mean? Robert Rodriguez on a heist movie. Another is described as a more intimate, tender story connected to director Haifa Al-Mansur, and also involving Dakota Johnson. Details like release windows, distribution plans, and start dates have not been publicly confirmed, but the announcements point to a mix of genre and tone rather than a single comeback vehicle. Separately, Alba has also been attached to a spy thriller project titled The Mark, with early materials circulating as the film seeks broader distribution. The title has been positioned as a more action-forward role, aligning with the screen persona that first made her a household name. That is enough. Okay. Honest Company. Less direct to consumer, more retail focus. In business, the most concrete recent change is at the Honest Company. The personal care and baby products brand Alba co-founded. The company has been moving away from direct to consumer operations, including shutting down its mobile app and pulling back from selling directly through its own online checkout. The move is part of a broader effort to streamline operations and focus on profitability, with a heavier emphasis on selling through large retail partners rather than managing subscriptions and fulfillment internally. The company has also indicated it is narrowing focus to core categories and exiting certain lower margin areas. This shift matters for Alba's public business identity. For years, her persona This shift matters for Alba's public business identity. For years, her personal brand and the company's brand were closely intertwined. Now, Honest is leaning more on the scaled consumer brand playbook than on a founder-led direct sales model, where Alba fits in Honest now. Alba stepped down from her day-to-day executive role as Chief Creative Officer in April 2024, while remaining involved at the board level. That change marked a formal transition, less operational responsibility, more governance, and advisory influence. Since then, Honest has continued to update its strategy and operating model, and the brand has gradually become less dependent on Alba's constant visibility. That doesn't mean her association disappears. She remains one of the company's founders, but it does signal a more conventional public company posture, where the business narrative is driven primarily by performance and execution rather than celebrity-led marketing. Okay, that's pretty cool. What to watch next? I mean, this article is all about Jessica Alba. I don't really care about that. I care about... Yeah, she's continuing repositioning in Honest. Okay, I care about Honest. I don't really care about Jessica Alba that much. She's hot, but... I don't know. I think she's like 50 at this point. But I mean, she looks, we don't need to get into Jessica Alba here, guys. We're talking about honest company. Okay. All right. Back to business. So all right. Chain link. Let's have a look at these cryptos again. Bitcoin still sitting there at 70,303. Going creeping down in the last hour. Down 0.93% in the last 24 hours. Okay, this is kind of just a little, like an AI headline here on this CoinMarketCap site. It looks pretty cool. The Federal Reserve proposed skinny payment accounts are pitting banks against crypto firms over access to central bank rails and the future of stablecoins. The Fed is considering skinny master accounts that give fintech and crypto firms limited Fed payment access with balance caps and no interest or credit lines. Crypto companies largely support the idea as a way to reduce dependence on a few big banks, while bank lobbies warn it could undermine supervision and financial stability. The final Fed rule, combined with White House talks on stablecoin yields, could reshape how stablecoins are issued and where dollar deposits sit across banks and crypto platforms. I read that kind of weird, but we get it. Alright, let's dive deeper. How skinny accounts work. The Fed is, this is what they've been kind of going back and forth on, guys. We've all been hearing about this, I would say, at this point. And if you haven't, here you go, and you hear about it right now. So, how skinny accounts work. The Fed is reviewing a proposal to offer skinny master accounts, essentially narrow payment accounts at the central bank for fintechs and some crypto firms. These would differ from full bank master accounts by imposing strict limits. According to comment summaries, the Fed floated caps such as an overnight balance limit of the lesser of $500 million or 10% of the holder's assets, with no interest paid, no federal credit, and no direct access to the Fed's automated clearinghouse. Fed Governor Christopher Waller has argued these accounts could support innovation while keeping the payment system safe by ring-fencing risk for non-traditional players. I don't know, I kind of always thought that, like, the whole idea of these, like, Bitcoin and stuff like that was to be separate from the government. If it's just a government, like, overseen currency, then it's just, I don't know. We're getting kind of weird now. Well, it's always been pretty freaking weird, honestly. But it has its uses. Like, there are things I've seen and heard of people doing with Bitcoin that, like, you might not be able to do with traditional dollars, you know? And, like, I mean, if the government knows exactly what's going on with it, they have full, like, oversight of it, then I couldn't see them allowing stuff like that to continue. It doesn't make any sense. I don't know. Alright. Why banks and cryptos disagree. Crypto aligned firms and some fintechs are broadly in favor. Circle and other industry groups told the Fed that skinny accounts would strengthen United States payments, reduce uncompetitive practices, and avoid concentrating risk in a handful of correspondent banks by letting stablecoin issuers and payment firms hold reserves closer to the Fed. Traditional banking associations take the opposite view. Groups such as American Bankers Association and regional bank lobbies argue that many eligible entities lack a long supervisory track record and are not subject to consistent safety and soundness standards. Reform group Better Markets went further, calling the proposal an irresponsible and reckless giveaway to the crypto industry that could expand the Fed's mandate and introduce new systemic risks. Yeah. So I'm just thinking, like, why wouldn't somebody be able to just kind of, like, create a coin and, like, kind of pretend that it's been pumped up in some kind of way and then cash that out? I guess maybe that's kind of what they're guarding against or something like that. I mean, wacky stuff, cool stuff, neat stuff. All right. Stablecoin and market structure impact. For stablecoins, skinny accounts could be a big structural shift. Limited Fed access for regulated issuers would make some dollar tokens look more like tokenized central bank money, while still keeping leverage, lending, and yield outside the Fed's balance sheet. At the same time, banks are already warning that high-yield stablecoins could pull deposits out of traditional savings accounts, and the White House is convening meetings between bank and crypto trade groups to find a compromise on stablecoin interest and reserve models, The skinny account debate slots into that bigger fight over who controls dollar payments and savings. What this means. Watch which stablecoin issuers and crypto banks ultimately gain Fed-style access, and on what terms, because that will likely determine which dollar tokens regulators treat as safest over the next few years. The skinny account proposal is not about day-to-day prices, but about who sits closest to the Federal Reserve in a more tokenized dollar system. If the Fed and White House land on a cautious but open framework, regulated stablecoin issuers could gain new credibility, while traditional banks face tougher competition for deposits. If bank concerns prevail, access may stay tightly constrained, keeping crypto dependent on a small number of intermediary banks and slowing more radical payments innovation. Okay. Now that's according to the AI here on CoinMarketCap, but it all sounds pretty, they supposedly have 23 sources or something like that, so who knows? Who knows? It's all AI these days, guys, everything. Just kind of a, what we're doing here, kind of like a personal tidbit. I had to deal with some AI, like doing some over the phone stuff. I needed something like insurance, faxing, email type situation. Had to deal with AI over the phone. Bruh. The clankers got a while to go. I'll tell you that. Nonsense. Pure malarkey. Is it, guys, if anybody watches this, let me know in the comments. Are you guys nice to the AIs or are you mean to them? That's kind of a fun... I'm not going to lie to you. As soon as they start not getting stuff right, I'm like screaming at them. I don't like them. I need a person. A person would understand this instantly. You're screwing this up. That's why I'm like, nah, bruh. They got a while to go. What was going on? There we go. Warden. Number 2 over here, Warden. Over the last 24 hours, it's up 3.96%. Over the past hour, it's down 6.43%. Warden. There's a 1-month chart for Warden. Check that out. Write something down. Alright. So here we go. We got Warden. Or Ward. W-A-R-D. I haven't heard too much about this, but it's trending today. Here on February 9th, 2026. Over the last 24 hours. Over the last 24 hours, it's up 3.87%. Over the past month, it's down 19.35%. Okay, over the past year, it's down 19.37%. And on an all-time chart, it's up 28.35%. It has a market capitalization of $32.44 million. Very interesting. Let's go Baby Shark Universe. Check that out. We got Baby Shark Universe, BSU. On a 24-hour chart, it's down 2.38%, sitting at 12, almost 13 cents. 1.1298. 0.1298. Baby Shark Universe here, guys. Over the past month, it is down 13.38%. Over the past year, it's up 156%. I mean, what are we doing here, guys? All time, it's up 156.02%. Okay. So, it was listed on Alpha Spot on 8/9/2025. And then it was listed on Bybit Futures 8/27/2025. That's Baby Shark Universe. It's got a $21.8 million market cap. Pretty cool. Pretty neat. It's 4:47 in the afternoon, guys. Let's peep the heat map one more time, maybe. Nothing new, nothing crazy screaming. I kind of want to do one more of these cryptos. This is kind of fun. Looking into the wacky cryptos. Wacky crypto. Sissy hypno. Suck a big toe. I'll pull my stream back up. Got some stuff going on. I'm a real human being, guys. I am a real person. Okay. Let's find a good one with a weird name. Mango Network. Maybe. Let's do it. Mango Network. Alright. Alright, here we go. We got Mango Network. On a 24-hour chart, they're down 2.07%. On a 1-month chart, they are up 0.19%. For a 1-year chart, they are down 36.1%. All time, they are down 2.76%. Sitting at 0.0216 cents. So a little over 2 cents. A little over 2 cents a share for Mango Network. They got a market cap of 34 million. Yeah, 34.67 million. Pretty cool. I think my house is falling down, guys. It's making noises. It's not good. It is making a noise. You know, I think that's going to be it. It's 4:50 in the afternoon. We've been here streaming for like an hour and a half. I think that's going to do it. We've sat here and covered Mango Network. I mean, what are we doing here? What are we even doing? No, I think it's cool. I think it's fun. I think we're coming along, guys. If anybody ever watches this, let me know what I can do to improve. I'm trying to improve as quickly as possible. Like I said, my goal by the end of the year is to have 1,000 subscribers. I think we can do it together, me and you. It's your cousin Dustin, guys. Stay tuned.